Hello guys, I hope you are all doing fantastic today. In this video, I'm going to do a detailed pre-market analysis for the dollar index, GBPUSD pair, EURUSD, and the gold pair. So welcome to this channel. If this is your first time and you're new here, feel at home and don't hesitate to hit the subscribe button so that we can grow together. So starting with what I'm having for today, we need to go through the economic calendar, which will guide us through the new week so that we know when to expect news releases for that specific trading week. Now, looking at the calendar, we can see that on Monday, we have no news. Coming into Tuesday, we have some news for the pound, which is at around 2 a.m. New York time. Then we have got some orange folder news events, and Wednesday we have got a red folder, which is the CPI for the yearly data. Then we have one for EURUSD on Thursday, which is the main refinancing rate and monetary policy. So, and the final one into the day, which will be at around 8:45 a.m. New York time. Then on Friday we have a combination of different news for both the three pairs, and these are orange folder events. So we also have President Trump speaking later in the day. So these are the news releases that we are going to focus on into the new week. Basically, we need to give much attention to the red folder events because they are the ones which normally have greater volatility in the market, and it should find you when you're prepared. So I normally prefer trading after the news has been released because there are very high chances that you can get your ass whipped if you engage before the release. So this is going to be our roadmap for next week. Tuesday is going to be a tradable day, Wednesday is a tradable day, Thursday is a tradable day, and Friday is also a tradable day, considering that we have some orange folders, though they are not of that great impact when it comes to how they influence price movement. And now diving into the charts, I have these points of interest marked on the dollar index. I am having my monthly fair value gap, the bearish fair value gap, as the draw on liquidity. So looking at how price has been reacting for the past weeks, you can see that originally we came from this point and it gave us a swing low. Price took the external range liquidity, then traded, coming for these buy stops here, which are also treated as external range liquidity. So it moved from sell side to buy side. Then after taking the buy side, it traded back into the range, then was held here by this order block here. So this is a bullish order block. It gave support, and from then price has been going higher. And if you look, you can see that price traded into this fair value gap and it got a very good support zone, then again expanded, giving us with a new fair value gap, which was also used as a very good point for pushing price higher. And now we have got this new zone, which was given in the weekly. There's a bullish weekly fair value gap, so it has been the point of support for the past 3 weeks, because look at this candle which closed bearish and traded into the fair value gap. It was repelled once price reached the middle part of the fair value gap, which we refer to as the consequent encroachment. Then this other candle also traded into the fair value gap, and the third time, then following last week's price action, we got a massive candle which actually moved from the BC. Now going forth, this is my immediate draw on liquidity. I would love to see price come for these buy stops, and if you're able to come for these buy stops here, then it will not be difficult for price to come to these bearish fair value gap on the monthly time frame. So this is what I'm having on the weekly. Moving down to the daily time frame, we have got significant points of interest that I want to bring to your attention. So this one has been used as the level of reversal. So these are market maker buy model which is in play. Initially we had printed the sell side of the curve, with this zone being the original consolidation, then priced into the fair value gap. Then yesterday, which was on Friday, it broke the structure at this point, what we would refer to as a market structure shift, and left behind a bullish breaker block, signifying that we are going higher. This is a good sign that price is indeed coming for these buy stops. So we are currently on the buy side of the curve. After this smart money reversal had occurred, we can see that price took liquidity from this level, then with the bullish candle which was massive, it confirmed the longs. Now this being the buy side of the curve, we want to see higher prices into next week. You can see how price reacted to the various levels which we are having. So initially this was the order block which supported price when these candles week traded into it. Also we have got a volume imbalance which was used as a very good confluence, and you can see what happened on Thursday. The candle low traded into the volume imbalance, then was repelled back, and the day closed with a massive bullish candle. So this is a good indication that we are going higher. With all this said, now trading the other dollar correlated assets becomes easy, because once we know the direction that the dollar is taking, we can now easily come into a conclusion that the other assets such as GBPUSD and EURUSD are to go lower because of the inverse correlation that they have with the dollar. Gold also respects the dollar index to some extent, but it is not that much perfect. It all depends on a significant number of factors, considering also that currently we are having tensions in the geopolitical arena. So trading gold would be a bit tricky, pegging it solely on the dollar. So for the currencies, it is a good shot, and for gold it requires much patience and much carefulness when engaging it. So going to GBPUSD, we can see that it has a very beautiful structure. Now I have already marked the levels that I wanted to use. We can notice that the pair has been in a range for quite some time, and it traded earlier on, taking these buy stops here, then traded back into the range and got repelled. Now we are inside a very tight range. Now what you need to know is that this is the external range liquidity, and this other new level would be treated as our external range buy side liquidity. And now using the Fibonacci retracement levels, I can take the tool and grade this range into 4 different quadrants so that I can know where price is currently trading at. And we can see that this is the equilibrium of the level. Price had already traded into the premium zone, and the reversals actually kicked in. Now I'm looking at the potential sells which may unfold going into next week as we come for this sell side liquidity down here. Now focusing on what I'm having, let us zoom into the zone so that we can see how price beautifully reacted to these levels. Just look at what happened. Once price traded into the fair value gap, it came and took the sell side liquidity, and price again traded back into the zone and got supported here at this bearish order block on the weekly. Now we are witnessing lower prices going down to the daily time frame. We can see that price, after trading into the weekly bearish fair value gap, it took out buy stops from this level, and now we are going lower. Now what I want us to notice that price closed below these two consecutive series of bullish candles at this moment in time, giving us a confirmation that indeed the state of delivery has shifted from bullish to bearish, and also leaving us behind with this candle here, which I would consider as a bearish order block. This is a very strong indication that price is to go lower. Now I want to see price disrespecting the bullish PDRAs. In this scenario, we have got this bullish fair value gap and we have got this order block here. Now I want to see price going into next week disrespecting these levels, of which I would love to see price going through the fair value gap and then maybe using it as a retest zone before continuing lower for this sell side liquidity, which is residing at this swing low. So this is what I'm currently having for the GBPUSD pair. I want to see lower prices, and let me mark the breaker for you so that those who are not able to see it clearly will be saved. So that is the bearish breaker block that is currently holding price. Now we want to see a bearish week, and remember that we will trade in relation to the theory of time and price. So most of our trades are to be taken either between London session or during the New York session. So this is what I'm having on the pound, and going into the EURUSD pair, just the same narrative I'm having on it. Starting from the weekly time frame, we can see what happened. This is a monthly bullish fair value gap, and it is my long-term draw on liquidity. And looking at what happened initially, price had taken this buy stop pull of here, then to the back into these regions. So I'm expecting price to come for this low, which I'll use as my level of sell side liquidity or sell stops. Then if we are able to come for these sell stops here, this order block will also be a potential draw. So looking at what has been happening on the euro, it has been having some slow price movement, but definitely we are going lower. It is just a matter of patience, though it is not the best instrument to trade as that now. I would prefer trading the pound over this instrument, but we can just analyze and see what it has been having. So price traded into this bearish value gap here and got repelled, gave us a bullish candle. In this scenario, this is what we treat as a bearish order block. Now look at how price reacted once it traded into the bearish order block. We had a very massive sell candle with that week closing bearish. Then the following week also closed with a bearish candle. Then we went into some sort of a consolidation like for 3 weeks, which have been a very difficult period to trade. But it left behind what we would consider to be a weekly CB, sell side imbalance, buy side inefficiency, or what we call a bearish fair value gap. Once price traded into the bearish fair value gap, we witnessed massive sells during last week's price action. Now going into the week, I would also love for these kind of price action to continue as we come for this sell stops here, then followed by this level. So going to the daily time frame, I would love to bring to our attention what is happening. So just look at how beautifully price reacted to the bearish fair value gap. Then now I'm having this level here, which is a breaker, a bearish breaker block on the daily time frame. Now I'm expecting this zone to hold as price continues going lower. So that is what I'm having for the EURUSD pair. We will come to know more when the markets have opened and there are additional information but as of now, this is my most obvious analysis of what is to unfold into the new week. So don't hesitate when you find bearish setups which would support price towards this low. And going to the last instrument, which is the XAUUSD pair, I would love for us to start from the weekly time frame. We can see that lately price has been moving in some sort of a funny trend because the candles are lacking momentum, and this shows a lot of indecision. This has been caused by the mere fact that the US and the Iran war has actually gone for so many days, and the investors are kind of sitting on their hands. But what I am having is this monthly bullish fair value gap, which I am using as my draw on liquidity. So I have been expecting sales to be delivered in this instrument. So I'm gonna treat this level as a bearish order block, whereby we traded into it with this last week's candle. Now I'm expecting that going into next week, lower prices will continue being delivered. Then looking at the daily time frame, we can see that it has also been in some sort of a range, making it difficult to engage. So one thing that you should know is that when engaging this kind of markets, you need to be very, very careful, because there are higher chances that you are gonna lose. The environment itself has been very unfavorable. So you really need to know when you are supposed to engage and when you're supposed to sit on your hands, meaning that in such a scenario, you lower down your risk exposure so that you don't get big losses. Now, looking at what has happened, this is a rejection block here, then price traded down here, then continued in the range with some two bullish candles. Then this day, which was on Thursday last week, gave us a bearish move. Yesterday's candle, which was on Friday, traded with a lot of stress, and this is more of an indecision candle. Now I'm expecting to see price come for this low here as the immediate draw. So I want to see bearish setups going into next week, as this would be the immediate draw on liquidity, trading towards the monthly bullish fair value gap for potential support. So this is what I'm having for the gold pair, which has proven to be a bit tricky lately. But if our model is presented, we actually don't hesitate to engage. So that is what I'm having for next week. I hope that we are on the same page. If you have got a different idea, you can comment, then I get to hear about your different perspectives. Above all, thank you for your time, and also I am asking you guys to subscribe to the channel for more content like this as we wait for a new trading week. Bye bye.